Good evening and welcome back to Be Rich. Today I want to talk about a strange phenomena that is happening all across the globe, and that is happening in India, it's happening in Europe, it's happening really big time in America. What is happening, which has not happened in a long time, is bond markets and stock markets are falling together. The Dow has already lost 13% this year, the Nasdaq 22%. So stocks are in real trouble, that much we know. But also, what is happening along with it is a carnage in the bond market. Short term treasury yields are at 3% for the first time since 2018. For the first time in 22 years, the Fed is set to increase interest rates by 0.5%. If the Fed increases rates by 0.5%, all bets are off. Last time, when the Fed tightened its rates, the yield reached 3% at the very end of the tightening cycle. Here, the tightening cycle is just beginning. It's just 0.25 done and zero point 0.5 by the end of the month. The Fed is expected to raise rates to up to 2.5% bare minimum. That means 0.25 means another 2.25, of which zero point 0.5 is expected today. Another 1.75 is on the way. This means the Fed's actions will push the US Treasury to minimum 5% by the end of this year. If the US Treasury yield reaches 5%, this means the yields have tripled in within a year. The yields were as low as 1.5, they have reached 3, and if it reaches 4.5, it means yields have tripled. This means those who have invested in bond mutual funds and who are holding treasury bonds, they will get butchered. So it's very clear that dollar is going to get costly. As dollar gets costly, those who are holding treasury bonds are going to pay the price. In fact, one will not be surprised if bond funds lose 50% of their holding. Their bonds have been having a sustained bull run for the last 20 years. All you had to buy was a bond fund and go to sleep, and the markets would have kept rewarding you. But this is because the central banks thought they conquered inflation, and inflation has gone forever. But unfortunately for them, a confluence of several factors the COVID pandemic, the stimulus checks, and an aging population in China have made sure that there will be in the end to this Goldilocks saga in inflation. But adding to the pressure is also a commodity shock. The Russian Ukraine war made an already a bad problem worse. The Russian Ukraine war has contributed to stoking inflation in three ways. One, it is the biggest bread basket in the world. Russia is the largest exporter of wheat, Ukraine, the fifth largest exporter of wheat. With these two, the first and the fifth largest exporters out of the market, food prices have gone through the roof. Russia is one of the major exporters of crude. America is insulated because it does not really import crude at all. But the entire continental Europe depends on Russia for its energy security, and the ban on Russian crude is really hurting. Though the ban on crude is not effectively placed yet, but it is definitely coming as the war moves into its third month and there is no sign of it ending. In fact, America has gone to the extent of calling Putin a war criminal. So, even if the hostilities end tomorrow, it does not mean that the world will kiss up and make up with Russia. So, this is going to be an entrenched problem, and crude is going to be on a high plateau. Then is the idiotic policy of Xi Jinping. Xi Jinping suddenly decided he would have a zero COVID policy. And since COVID is a moving virus which keeps on mutating, a zero COVID policy does not make sense. He decided to shut down his major financial city of Shanghai for nearly a month, hoping that he would conquer COVID. But COVID seems to dodge him and move from one city to another city, and a self inflicted injury has taken place. It is now very clear that China is going to contract this year, and any idea that it will push infrastructure and increase the investment in it will compensate it for growth is not happening. In fact, the Financial Times has reported that there's a huge problem in Hong Kong. Hong Kong has had a severe contraction in its economy, which is not possible in a trading economy. But having managed it because of its zero COVID policy, now China and Xi Jinping want to do a U turn and say that they may relax zero COVID policy for Hong Kong. The consequences for the world are enormous. In fact, for Western Europe and America, China remains a factory to the world, and therefore, when Chinese factories are shut down and are not producing enough, the cost of goods are going to go up in American ports. Americans already are flush with cash looking to buy consumer goods is coming from China. And with the yuan falling continuously and at a multi year low, it has made things very cheap in the US. So people are buying more Chinese goods, but the non availability of these goods has pushed prices further, contributing to inflation. America has another problem. In combating inflation, it will be forced to increase interest rates, while the rest of the developed world is following a more nuanced policy. Euro will also increase rates, albeit not at the pace at which the Americans are going to do. The Japanese central bank has clearly said that there is no inflation in Japan and they are not going to increase interest rates. The yen is at 130 to a dollar and has made sure that there is going to be no increase in Japanese rates. So, Japanese goods, cars, and electronics are going to be very cheap, and Japan is going to run a huge trade surplus because it is going to continue with its loose monetary policy. Therefore, it looks very clear rising interest rates are acting like a gravity on US stock markets and pummeling the bond markets. But there is nothing that the Fed can do. If the Fed removes the punch bowl this time, inflation will go out of control. Expect a tight monetary policy for America right through, and the markets correcting in lockstep with the bond market. Thank you for watching. Be rich. If you like the content, kindly consider sharing with your friends and relatives. Also, do not forget to press the subscribe button of my channel and turn on the bell notification. If you do not turn on the bell notification, you will be not notified every time we put out a video. Once again, I thank you for supporting Be Rich. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.